Welcome back to the 10K SOXL Trader Challenge Day 53. This episode is the recap for the October 29, 2025, Wednesday, trading day. No trades today, primarily focused on observation and monitoring. Market overview. FOMC decision landed with Fed cutting rates 25 basis points as expected but releasing hawkish signals. Market closed mixed. Dow down slightly, S&P nearly flat, Nasdaq up. AI, semiconductor heavyweights led gains with Nvidia breaking through $5 trillion market cap milestone, but market breadth remained weak. With signal quality below standard, chose to stay in cash and observe. Daily operations and execution. Capital base. Available capital per trade is $10,708.53. Day 52 ending balance. Orders placed in whole shares, without leverage or margin, ignoring commissions and slippage to maintain statistical consistency. Execution rules. Execute after signal confirmation. No structure or volume meeting entry conditions appeared today. Chose to stay in cash and observe. Trade details, SOXL. No trades today. Daily P&L and net asset value. Daily gross P&L. $0. Daily account return. 0.00%. Latest account balance. NAV. $10,708.53. Index and market recap. U.S. Equities overall. Fed cut rates 25 basis points as expected but released hawkish signals, with mixed close, based on market observation. Dow down approximately 0.2%, S&P 500 nearly flat, Nasdaq up approximately 0.5%. Driver was Fed's reserved stance on whether to continue rate cuts in December, with intraday sentiment reversing multiple times. Semiconductors and high beta. AI, semiconductor heavyweights led gains, based on market observation. Nvidia rose reaching approximately $5 trillion market cap milestone on this day, with Teradyne surging over 20% on strong earnings and guidance. Style characterized by few leaders lifting indices, breadth weak. For SOXL, trend phases have high win rates but need to guard against chasing pullbacks. Interest rates and dollar. 10-year Treasury yield rose after FOMC decision, closing around 4.05% to 4.08% range, based on market observation. Dollar index, DXY, rebounded to approximately 98.8 to 99 area, both contributing to some contraction in marginal support for high valuation assets. Futures and volume. Market breadth narrow with indices driven by few heavyweights characteristic was obvious. Futures and spot linkage weakened in afternoon. Chasing prices requires second volume expansion confirmation, strategy note. Today's news. Macro and policy. Fed cut rates 25 BP to 3.75% to 4.00%, while releasing signals of stopping balance sheet reduction, QT, starting in December, based on market observation. Powell emphasized December rate cut, far from a done deal, triggering market reassessment of further easing. Industry and corporate. AI chain continued as bull carrier, based on market observation. Nvidia market cap milestone and high growth in test equipment demand drove semiconductor sector sentiment. Individual stock divergence expanded with Meta down over 8%, Alphabet up over 6%, Microsoft down over 3%. Market structure. Broad indices oscillating, tech heavyweights relatively outperforming but breadth weakening. Treasury yields and dollar moving up together, forming some constraint on risk appetite. Quantitative summary. Number of trades. 0. Daily gross P&L. $0. Daily account return. 0.00%. Latest account balance. $10,708.53. Execution and review highlights. Discipline. Adhered to. Signals before positions. Positions subject to risk control. Principle. Did not meet entry structure and volume conditions today, chose to stay in cash. Strategy. After FOMC decision landed, market divergence was obvious, Nvidia and few other leaders strong, but market breadth weak, based on market observation. In, heavyweights leading, breadth weak, rates and dollar rebounding. Setup, SOXL more suitable for confirmed short trades and dip buying on pullbacks, avoiding emotional price chasing. Observation focus. After Fed hawkish comments, December rate cut expectations dropped from 95% to around 65%. Market expectations for further easing cooling need to wait for market reaction after policy path becomes clearer. Closing thoughts. Day 53 on FOMC decision day chose to hold fire, saving positions for more certain structure and volume resonance windows. NAV maintained at $10,708.53. Today's market environment was quite representative. Fed rate cut landed but released hawkish signals. Nvidia and few other leaders strong driving Nasdaq higher, but Dow down, S&P flat, with market breadth clearly weak. This raises a question worth considering. For systematic trading, when market presents few leaders driving indices but breadth weak structure, how does your system handle this surface strength, internal divergence situation? Do you continue waiting for breadth improvement or adjust strategy to focus on leading instruments? How do you identify and respond to false strength risks within your rule framework? Moving forward, continue waiting for two types of opportunities before executing. Volume breakout, price volume resonance with improved continuation. Confirmed stabilization after pullback to key moving averages, range lower bound. Core remains. Risk priority, confirmation priority, quick in and out, execution framework. If this recap is helpful, please like, save, and share for support. Also welcome to share your views on post-FOMC market trends in comments. Follow the account to not miss daily live trading recap updates. See you in the next video.